In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analysts' predictions are, create a valuation, and review then rate the company. Today we are going to look at Celsius Holdings, ticker CELH. Let's dive into the process I follow when reviewing whether or not to invest in a company. After I've collected all the financial information, I then analyze what I consider to be the 12 key pillars. These pillars are based on the insights and teachings of the best super investors and what I consider to be the key metrics when evaluating a company. Ideally, we would like to see each of these metrics achieve or exceed a specific target. Companies can earn 1 point for fully meeting the target or 0.5 points for coming within 2% below the target. The first pillar is earnings per share growth. This is where we take the net income and divide it by the shares outstanding. For Celsius Holdings, earnings per share growth over the past 12 months is -40%, which is negative, scoring 0 points. Next, let's look at free cash flow growth, which measures the money a business can generate from its operations. Warren Buffett emphasizes the importance of strong financial health and prefers companies that can generate substantial free cash flow. Celsius Holdings' free cash flow growth is 36%, exceeding the 10% target, scoring 1 point. Next, we come to revenue growth, which tells us how good the company is at generating income before deducting expenses. Celsius Holdings' revenue growth is 2%, below the 10% target, scoring 0 points. Now let's turn to book value growth, calculated by subtracting total liabilities from total assets to indicate equity growth for the company. Phil Town believes book value growth is the most important metric, as it has the interest of the shareholders at heart. Celsius Holdings' book value growth is 12%, exceeding the 10% target, scoring 1 point. We then assess the management of the business by looking at return on invested capital and return on equity. These measures allow us to evaluate a company's efficiency at allocating capital. For Celsius Holdings, return on invested capital is 12% and return on equity is 12%, both exceeding the 10% target, scoring 1 point for each. Now we move on to debt. Joel Greenblatt prefers companies that are able to pay off debt with their free cash flow within 3 years. Celsius Holdings' debt would take 0.12 years to pay off, which is well below the target and earns 1 point. With the information we have gathered, it tells us that aspects of the key pillars are solid, but let's explore the company further. Now let's look at the remaining key pillars which help define an excellent business. Let's look at the gross margin, which indicates how much money a company retains after incurring the direct costs of producing its goods or services. This is currently at 50%, exceeding the 40% target, scoring 1 point. Next, we come to the operating profit margin, which tells us how much profit a company makes on $1 of sales after production costs but before interest or tax. Peter Lynch prefers companies with strong operating margins when assessing their financial health and competitive advantage. Celsius Holdings' operating profit margin is 12%, which is 2% below the desired threshold, scoring 0.5 points. Free cash flow yield provides a more realistic view of a business's financial health. Terry Smith prefers companies with a free cash flow yield of 5% or higher. Celsius Holdings' free cash flow yield is 2.19%, falling below the target, scoring 0 points. Next, we assess the 10-year book value growth as potential shareholders. For Celsius Holdings, this is 58%, exceeding the 10% target, scoring 1 point. Lastly, Bill Miller believes earnings growth is the biggest indicator of a company's stock price. Celsius Holdings' 5-year net income growth is -1,067%, which is negative, scoring 0 points. In the description, I've included a link to the investors page and the annual report if you want to check it out for yourself. Celsius Holdings has demonstrated strong fundamentals in certain areas, such as free cash flow growth, book value growth, and high return on invested capital. However, significant concerns arise due to negative earnings per share growth and a sharp decline in net income over the past 5 years. As of today, the stock is trading at $32.62. Over the past 6 months, the stock has shown mixed momentum, as the company faces profitability challenges despite revenue growth. Over the past year, Celsius Holdings' stock price has experienced volatility, reflecting investor uncertainty about its long-term profitability. However, the stock is rallying thanks to a $1.8 billion acquisition and rose 28% before the market close. Looking at the overview, we can see the current market cap is approximately $7.67 billion. They are currently generating $1.36 billion in revenue for the trailing 12 months and have 235 million shares outstanding. At present, their earnings per share tell us that for each share of stock, the company is generating 45 cents. Their price-to-earnings ratio is 72.49, which is higher than the S&P 500 average of 30.63. According to Morningstar, Celsius Holdings has a narrow economic moat due to its brand recognition and strong positioning in the functional beverage market. The overall consensus among analysts is a strong buy, with a 12-month price target of approximately $49. Analysts are forecasting an average EPS growth rate of 29% over the next 5 years. Let's calculate a valuation. I will use Celsius Holdings' current earnings per share of 46 cents. Combining historical growth rates and future analyst predictions, I estimate an earnings per share growth of 20%. Assigning a forward price to earnings ratio of 40, projecting 10 years forward, and applying a desired return rate of 15%, this results in a future stock price of about $113.93. The current intrinsic value is about $28.16, with a margin of safety at $21.12. Since the current price of $28.20 matches the intrinsic value, this scores a check. It all depends on your personal view and outlook for the company, as well as the return on the investment you would like to see. When reviewing the key pillars, Celsius Holdings scored 7.5 out of 12, earning a check. Over the last 6 months, the stock has experienced mixed momentum, reflecting ongoing profitability concerns, scoring a cross. Analysts are predicting a growth rate of 29%, scoring a check. The current price matches the intrinsic value, signaling a check, but is above the margin of safety price. According to Morningstar, Celsius Holdings has a narrow economic moat, which scores a check. My final overall rating is 4 out of 5 stars. While the company demonstrates strong growth potential, negative earnings per share growth and weak net income trends are areas to monitor closely. I have given this stock a C rating within my stock watch list. Thank you for joining me in today's analysis. Don't forget to like and subscribe for more insights.